Okay, good afternoon, traders. Good afternoon. My name is Raul Rivera. I'm the founder of the marketprofile.com. Today is September 1st, 2017, first day of the month, and also a Friday, so we had the non-farm payrolls report today. And by the way, shout out to the CNBC app for fooling everybody into thinking that that the U.S. Created 244,000 jobs, only to be corrected and show only 156,000 jobs created today. Horrible number, but good news is good news, bad news is good news. That's the type of market rationale that we have right now. And with the joke of the day, as you guys know, I like to tell little market jokes. I have a market sense of humor. The joke of the day is, with non-farm payrolls reports this bad, we should really hit all-time highs, and I think we did in the Dow actually, which was pretty crazy. Okay, so let's take a look at some of our charts here. So, looking at the S&P, let me just minimize that. Looking at the S&P 500, I did take a trade here, but based on the market profile today, we had a D followed by a P, so it's a D plus P pattern. So we're looking pretty much to get long rather than get short. As you can see, it was coming into the weekend. I mean, the markets are closed. Of course, the futures markets are still open. They're going to remain open until 5 o'clock before they're halted for the rest of the weekend. And although Monday is a holiday, some futures markets will be open with a holiday hours type of schedule. It's never really worth trading. The volume is super small, and the trading activity is usually very, very muted. It's almost like the algorithms are the ones that are trading on holidays rather than real people. But some people do trade, but it's Labor Day. Go do something other than trading. We were actually positive in balance up until the end of the day here. We suddenly shifted to negative imbalance right at the late into the day here. We can see we had a positive 5,000 total imbalance from the 50 to 2,000 lot trader, and now we have somewhere in the negative 2,000s. So I think people are just taking profits and getting out of positions, possible risk over the weekend. Those type of traders are just trying to get out of their positions. So looking at today, we were really looking to buy the lows or possibly get long using our trend day strategy. Here we found value at the value area low of yesterday's trading around 67 to 65, 2-point range. Looking to get long. Of course, the market never made it that low. So the other way to do it was right here, was to use VWAP or TWAP. And because we weren't extending the range, I was really looking towards getting long at TWAP around these prices here in the 72.5 area. Little double bottom right there in the S&P, and then we started trading higher, and now we're starting to come back lower. But the idea was there. The execution, unfortunately, was not. Couldn't get long the S&P right there. The S&P traded higher. Zero reaction from the S&P to the non-farm payrolls. Doesn't surprise me. The last two non-farm payrolls, the S&P 500 hasn't done anything. In fact, I don't remember really June's reaction to the non-farm payrolls, but it was probably muted. I mean, the market doesn't really isn't really looking forward to this report anymore. Just be careful with the JOLTS report. I feel like in August, they care about job openings. Right, that's the JOLTS report, but they don't care about jobs that are filled, right? Which is the non-farm payrolls. So, okay, got it. Okay, it's like opposite day. This whole month of August, past month, has been opposite day, and I guess the trend might continue. With the S&P 500 today, I actually introduced a new bar type here that I've programmed. And let me show you one of the things here, going to the data series. And this is what we call a Pullback Renko. If you know what Renko bars are, then you'll know what I'm talking about here. And if you don't, I definitely encourage you guys to educate yourselves, not just on Renko, but all non-time based charts. And pretty much once a range is achieved, we should close the current bar and start opening the next one. Renko bar types are extremely popular, and this one is one of those variations of Renko bars that I haven't seen in the market, and I actually decided, hey, you know what? I'm gonna give these a try and program a Renko bar type with a pullback. Certainly not something I've seen everywhere. So with the trend being up, it's pretty obvious. I mean, trend continues to move up. We want to be buying the pullback. So here we had a pullback. We have an indicator here that indicates us to a possible pullback and then a breakout to the upside. We had positive volume on both, so I did get long here at the close of that bar, 24.7550. The trade was good for about 2.5 points at the best, at the very highs, but then as it started coming down, I had to let go of these. I had my stop at break even, but I decided, you know what, let me just get out of the position here. I got 2 ticks on the trade, which is better than getting stopped out and getting nothing at break even. So I said to myself, you know what, let me do it. And as you can see, the tail would have gone well below my break even. Of course, a little bit more patience could have gotten 3 or 4 points out of this trade. But nonetheless, I'm going to be applying this type of trading, this trend following based style of trading to my arsenal more and more often. Now that we see that the markets just like to trend for some reason, right? Crude oil, this was our second best trade of the day here. The best one came actually from the NASDAQ. I personally didn't take it, but I know a couple of the members from the trading room took it, and it was just pinpoint perfect accuracy. Thank you, market profile. So looking at the profile here, we have an inside day where pretty much today's range is inside the high and the low of the previous day's range. So this is Thursday, here's today. And not only that, but if I go ahead and split these profiles, what we get is pretty interesting. And what we have here is just a combination of multiple shapes. So we have a D shape, we have a B shape, and then we have a P shape, right? D followed by a B followed by a P. These are the shapes that we look for every single day. These are the shapes that we want to pick apart, but what they mean, if you see them all in the same profile, something is wrong. A D is consolidation. We see that at least on every single profile. A B is a trending down pattern, and a P is a trending up pattern, right? With that in mind, okay, so we consolidated, we trended lower, and then we trended higher, right? If we're in a downtrend and we suddenly reverse to an uptrend, there's a bit of indecision, right? The market wanted to sell and then it wanted to get long. So nobody knows where this market wants to go. The participants don't know either because there's no follow through from the bulls or the bears. So it's an inside day with indecision. We figured we're going to get long just below the lows and get short just above the highs. Fantastic trade here. I did have one loser though in crude, and that was early this morning here using the the Pullback Renko. And let me just go to data series, show you my fills, text and markers please. And the first trade was right here. I bought 3 contracts at 47.14 and stopped out of them at 46.99, losing about 15 ticks on the trade, coming to almost $400 loss here. So minus 400 there. And then this was the trade here, second best trade of the day. Took 2 contracts long at 46.60. This is a profile, a market profile level. Okay, buying just below the low. We figured 46.60 and then 47.30. Did I say 44? Sorry, 46.60 long and then 47.30 short. So you can see here, we call it the absolute low of the day. I got rid of one contract here around 46 something. I can't even read it. It's kind of in the way. Let's gently zoom in. 46.78. Target 1, that's 18 ticks, and then target 2, 47.10, which was good for 50 ticks total on this trade. So completely engulfing the losses on this long trade and executing perfectly here with the market profile. So we figured, once again, when we take a look at the profile, getting long just under the lows and driving that bad boy all the way up to 47.10. Could have had a lot more, but I was happy with 50 ticks, so I took it off at 50 ticks. With just one contract at 50 ticks, that's about $500 in profit, and then the 18 tick profit from that first target is good enough for $180. So not a bad day of trading here in the crude oil market. Now moving over to gold. Let's switch it up. So looking at the market profile, you know, the reaction in gold from the non-farm payrolls was to rally and then to sell off. You know, the number was good enough for gold and the 30-year to rally, but not good enough to convince the Fed that they should hold off on rate hikes. And that's sort of the narrative that took over, and the reason we started seeing a little bit of selling here in gold. So as you can see, you know, we pretty much consolidated for the entire session. The report came out, traded higher, and then came back lower around C period. It started trading higher again. As a reaction to the report, we were looking to get long. We were expecting a strong number, and we were expecting gold to really sell off. We like to place our orders somewhere around 10 points above or below price. That's usually the initial move. It's always plus or minus 10 points from when the news hits the market. Let me just cancel these. And this was the original area. So you know, 09.5 to 11, 09.5 to 11 long. Of course, you know, the market rallied to the upside. Let's see, Z period began all the way down here at 13.23, 10 points above 13.33. You see that? It happens a lot. It's always plus or minus 10 points that gold likes to rally or sell off. Of course, I'm only really looking for the long side rather than the short side. I thought the strong number would be good enough to get a pullback in gold, get in, and try to trade it all, and you know, execute all the way at the highs from an entry location at the low. So pretty much in essence, buying the dip in gold. So we rallied, and then, you know, much after the news, we figured, you know what, looks like we're just going to have a normal market. So let's use this area of value right here around 21 to 19. We're looking at 21 to 19 to get long. This is a value area right here on this P-shaped distribution. You can see that gold traded as low as 13.21 and 40 cents. So we missed out on our first long here by 4 ticks, unfortunately. And then the market rallied from there, traded as high as 13.31. So pretty much 10 points from where our trade location would have been. Of course, it took all day in order to get there. We can see that when we switch over to hybrid view. Here's that low that we were trying to buy, right? Candlesticks, everybody knows candlesticks. Here's that low we were trying to buy, and you can see it was an all-day affair, but it did make it as high as 13.31. And then the 30-year, this one was the most surprising one. I definitely did not expect the type of move that we did have here in the 30-year. Again, the 30-year looking for the long side rather than the short side. You know, I figured after the news, as soon as the news hits the market, we're either going to go higher or lower, and if we go lower, I'm going to look to buy. So, I mean, this seemed a little bit adventurous, but we were trying to buy 15 to 20. 154, 15 to 20. I guess it almost got to that level, but I guess looking at it now is pretty darn adventurous. trying to get long all the way down here, but we knew the reaction out of the 30-year would be a little bit strong, a little bit stronger than gold, simply because, you know, if there's no faith in bonds, there's always going to be faith in gold and obviously the stock market, right? Why just let your money sit in a bank account that's not gaining any interest when you could be making money on your money in the stock market? Here you can see the move started out as a tight consolidation inside day, got to the highs and then sold all the way down to the lows. Pretty crazy day. And then this was the other trade of the day. I'm going to show you guys in the NASDAQ. We had one or two of our members, I know one of them for sure, he was really excited about this trade. That took a really awesome trade here in the NASDAQ. On 4 contracts, he made over $1,000 on this trade. I personally didn't take this trade simply because I was just more focused on trying to get long the S&P 500. But I mean, sometimes the NASDAQ and the Dow provide a little bit of trade location for the indices. Sometimes the S&P 500 doesn't give you the opportunities that the NASDAQ or the Dow futures provide. So here, pretty much we had a D-shaped distribution for most of the session. Really just trading sideways, and this was pretty crazy. I mean, this was the range overnight right here. This was the range overnight, really tight trading. You can see, I mean, the number of letters here is insane. That's the point of control for the entire day. I mean, this amount of letters is pretty insane. I mean, we literally distributed through that price all night long, and as you can see, you know, pretty tight trading range is what we had. The news hits, we trade slightly higher than slightly lower, and we figured, there's no resistance up here. This is new all-time high territory. And, when we're trading new all-time highs, there's essentially, it's just blue sky, right? We can just continue to go higher and higher and higher. And we figured, we like the long side a little better, so why not try to take a long down here at 59.70 to 75. Now, the market was trading all the way at 6,005, and I know a couple of the members were like, "Hey, Raul, doesn't that seem a little bit extreme? Are we really gonna get all the way down there?" And I said, "Well, you know what? I have found that a lot of times these areas, they look really far away from the market, but look at the NASDAQ. I mean, the NASDAQ is valued at 6,000. It can sell off 30 points, 40 points, 50 points at any given point in time. We're not in the same market that we were years ago, where, a 30-point drop in the NASDAQ or a 50-point drop in the NASDAQ was like very horrific, right? Same thing with the Dow futures. Jumping 100 points in the Dow futures used to be the coolest thing ever, but now it's only 0.5%. In fact, it's a little less than 0.5%. 1% would be an increase of 220 points. And I mean, when's the last time we had that? Well, go and check it out. I mean, we had it a couple of times in August, but we barely had any 1% moves between January and July, which was pretty remarkable. But here, we found value. We said 75 to 70, that's the area to get long. The low of the day happened to be 59.73 and a quarter, if I'm not mistaken, in this trade. Went as high as 97, I believe. This trade did go as high as 97. I personally didn't take this trade, but we had a couple of members in the room that took advantage of the trade and made out pretty darn good. So just, the value of and the power of the market profile, allowing us to be able to locate these sections where, if we didn't use the market profile and we were literally just using candlesticks, we probably sometimes would figure, I don't know if there's resistance or support at that level, right? So the market profile definitely puts us in some pretty nice spots, because again, the simplicity of the market profile is, or at least the definition, the simplest way I can say it, and I know I sound like a broken record, is that the market profile is a charting technique that is used for locating value in the market, right? Value meaning support and resistance, right? Support and resistance based on prior bell-shaped curves or market profiles, correct? So yeah, that was our trading here in the NASDAQ, and that was our trading for pretty much the rest of the day. If you guys like this video and you're watching on Facebook, please give us a like, and if you have any questions or comments, definitely post those in the comment section below, and I will answer those as quickly as I can. If you guys want to learn more, visit the website www.themarketprofile.com. Claim your 14-day free trial. Watch me trade these markets live every single day and manage these positions for you all real time, as well as educate you more on our suite of tools, because we got plenty. I mean, we have the new custom bar type, the Renko and the range bar types. We have market profile, which we could view in TPO or hybrid mode. We have the, and I'll show you from here, we have the order flow footprint embedded into the candlesticks, where we could track executed order flow on any market that you guys like. We can see the order flow tracker down here counting pretty much the volume delta, and we can also pay attention to the institutional order flow traders. And you know, you could get this all, you could try it out for free for 14 days. All you have to do is sign up, and you know, if you like what you see, and you know, these are tools that you know, add value to your trading, we can talk further. So definitely visit the website www.themarketprofile.com, claim your 14-day free trial, and check us out. Everybody have a great, safe, and long 3-day weekend, Labor Day weekend. I hope you guys enjoy it. We'll be back on Tuesday. Have a good night, everybody.